It's FOMC day. What is the Fed going to say and how hawkish will they be? That's coming up on 3 Minutes on Markets and Money. At 2 o'clock this afternoon, Central Time, the Federal Reserve will announce their latest Fed policy, which of course will be a half basis point rate hike, very widely expected. What's going to make the difference for the market today is going to really be the press conference following it, where Jerome Powell really kind of lays out his vision for what is going to come next, right? It's going to be all about Fed projections, the dot plot, and most importantly, what Jerome Powell says. Yesterday, markets popped by about 3% at the open. Yesterday, sold off back below the 200-day moving average and below that long-term downtrend that we have since the January peak. Again, keeping that resistance in place. But markets are, kind of realizing that inflation, yes, is coming down. But at 7.1%, this is not going to pull the Fed off of their rate hikes, right? This is not going to turn the Fed rate hiking campaign into a pause, much less a pivot. The Fed is not going to reverse the course of their rate hikes and balance sheet reductions anytime soon, with inflation still at 7%. I would expect today that after the Brookings Institution fiasco, of course, this is where Jerome Powell made a speech to the Brookings Institute saying that, yes, they're going to slow the pace of rate hikes. The market jumped 3.1% that day, required Nick Timrose to come out the next week with a Wall Street Journal saying, no, that's not what Jerome Powell meant. Markets sold off because, again, the Fed is nowhere close to stopping hiking rates. A 50 basis point rate hike at any point in history is still a very aggressive move. Yes, less than 75 basis points, but all those rate hikes and the ones that are coming are still not in the economy yet. Those are all going to show up next year. Inflation is going to come down next year. But again, those rate hikes are going to slow economic growth. It's going to slow earnings growth. It's going to impact the economy. Exactly what the Fed is wanting to do. So again, I would expect today, maybe I'm wrong, but it wouldn't surprise me to see Jerome Powell very clear, so as not to repeat another Brookings Institute moment, that they are going to continue to hike rates into next year. They are going to combat inflation, and that potentially they might have to hike rates more than expected in order to get inflation where they want it to be. We'll see what they say today. We'll report back on it tomorrow. But again, be a little cautious today with trade. The entire move of the market will be dependent on what the Fed says today. We could either finish positive or negative, all on that statement. We'll talk about it in the morning on the next edition of 3 Minutes on Markets and Money.